Gang, welcome to my YouTube video. This is May 18th, 2016, the day that we got the minutes of the meeting from the Fed, and I'll explain what happened. First of all, they're all full of crap. Number one, they came out and said that they're going to possibly raise rate in June. They're going to wait and see what kind of numbers, how the economy improves. Well, my chart tells me right here it's not improving. You can see what happened today. It's still red. All right, they're green. That's when we buy our stocks. Institutions put money in, and when it turns red, institutions are pulling their money out. It's that simple. We made money on the way up here. We made money on the way down. In fact, if you look at our gold and silver, our silver right here, this is the money we made on the way up. When it turned from red to green, and we still own it. We took some profits, but we still own it. And what does this tell you? It just, we follow the money. We don't care about what they're telling us, okay? Everything they're telling us about the economy is getting better and it may be better in June, therefore they may raise rates in June is a bunch of nonsense because it's not going to be any different. The first quarter earnings declined by 8.3%, 4 consecutive quarters in a row. 4 consecutive quarters. And that's going to change in a couple of weeks. It's almost June now. What's going to change? They're doing this to try to help Hillary get reelected. They need to do this. They need to convince everybody the economy's getting better, and so that it helps her. Now, the problem is that the bank stocks went up today, right here. The bank stocks went up. But notice how they stayed red? Isn't that interesting? Didn't turn green, did it? And look at my momentum indicator. So it's still a short. So even though it went back up, it's still telling us that the institutions are still saying they're pulling money out. What a beautiful piece of equipment this is. This is a beautiful chart. Tells you what to do. All right, so here's the bottom line. We've had for the first quarter, say, negative earnings. We've had terrible manufacturing, terrible durable goods orders. Durable goods are big ticket items like TVs and appliances. Those all dropped. Business investment's terrible. Our transportation, aircraft all plunged, 27%. Existing home sales down. Business sales are 15% lower than 2 years ago. And the auto industry, which they're bragging about, has had it. They were down 16 million cars, rounding it off. And then what happened is they got nervous because, remember, 40%, okay, of the auto construction, all the auto construction equals, contributes 40% of our overall manufacturing. Imagine that. 40% of autos, when we do all the auto, build all those cars and trucks, that is 40% of overall manufacturing. Here's why they're so nervous. Because they know that the manufacturing is dead, is terrible. And remember, our retail sales in April collapsed into recession territory, led by auto sales. Now, yes, we had something like 16 million, okay, in March. And then what they did is they boosted to 17 million, and they're all excited. But wait a minute, how they got it there, they're extending car payments to 7 years, okay? If you can breathe on the rearview mirror, they give it to you. It's the old subprime trick. Same thing happened with autos. I mean, same thing is going to happen to autos. It happened with the subprime housing, giving anybody a loan, giving a loan to somebody that can't afford it. Same thing's going to happen. So where we stand is this. The market is going to continue to drop, okay? Even though we had a big rally today in the banks, we still have a pattern showing us lower highs, and the big pattern, it's red. Until this turns back up, it's telling you to stay short on the banks. The S&P is telling us to stay short. The SPY is saying don't buy the spiders right now. If anything, start taking profits and sell short. Okay, sell short. This is what it's telling you. So no matter what she said today about improving economy, it's not improving. And how do we know? Because at the end of the day, all we care about is we look at one thing. Are the institutions pulling their money out? It's red. Or are they putting their money in green? We don't have to know anything else. We don't have to know about revenues, don't have to know about earnings, don't have to know about aircraft sales, business investment, durable goods. We don't have to know any of that stuff. We don't. Okay? And this is a beautiful thing, because now that they lie so much, especially election time, about the economy, they've got people getting out of their non-cyclicals like Procter and Gamble. They're telling you get out of Procter and Gamble, which is the safety stock when the economy is bad. And they're telling you to get into stocks like TWI. And TWI, are you kidding me? What do? They build cranes, big cranes you see when they build buildings and high rises. Now, they only get orders when the economy's good, but they're saying get out of PG now and go into a stock that does well in a good economy. Well, the economy's not good. So who are you going to believe? Is it good? Not good. So they're getting everybody confused. They're telling people to get out of their safe non-cyclicals and get into unsafe cyclicals. So what you do is believe this. What you believe is this right here. That's how simple it is, okay? So why don't you check it out? This always works beautiful. Again, let me show you U.S. Steel. I asked everybody to get into U.S. Steel with me right here. I said, please, when it just turned red, I said, I want to show you how to use this. It went from green to red. I said, please join, try it for a month, and then just follow us with U.S. Steel. Look at this. Look at this. That's all that counts at the end of the day. Now, they can make any argument they want about U.S. Steel. They can form it to make it look like U.S. Steel is such a great company. They can form it to say it's not a great company. I mean, they can form it. They can fix the numbers any way they want for their for their narrative. I mean, it's amazing. Okay, give me an example. Listen to this here. This is crazy.
The economy is showing signs of strength. I think there was too much fear that we were going into recession, but the good jobs number, the durable goods number for the transportation data, there are a lot of signs now starting to build that the economy.
Those are bad signs. Durable goods numbers are way down. Transportation down by 27. Durable goods is down a 10-year low. What's he talking about? They just lie. So what do? Just watch right here. When your stock turns red, you sell short. When it goes from red to green, you buy. That's all you need to know. It's that simple. Join my gang, Phil's gang. See you on the charts.